Hey, it's Clay Trader, and this will be a video chart on ticker symbol ALQA. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like through this time frame. I think it does a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. And in this situation, makes mapping out a very logical question straightforward. And that question revolves around the fact that from where it was here at the low point to where it ultimately closed, this was a nice little bounce on the bulls' part. Now, was it an epic bounce? I'm not saying that, but there's no doubt about it. The bulls did show some signs of strength in regards to pushing the price upwards. And if you've been trading long enough, I'm sure you've seen stocks where after that gap's down, and then after the gap, it just pulls one of these maneuvers where it just keeps on bleeding and bleeding and bleeding the remainder of the day. But that didn't happen here. Not only did the price start to go sideways, but also got a little bit of a bounce to it. But that does bring up the question, is there any sort of true power behind this bounce, or is this just some sort of knee-jerk reaction? I have no idea, but like I said, by using charts, we can make answering that question very straightforward. And in my mind, it all revolves around this point right here at what we'll call 42 cents. Why is 42 cents so important? Well, hopefully we can all agree on the logic that price movement with genuine power, bounces that are actually bounces are, well, they're going to keep on bouncing. And the exact contradiction of a bounce would be the price going back to where it was. I'm assuming you're saying, hey, thanks, Captain Obvious. So with that in mind, think about the 42 cent mark. Any sort of closes below it, or worse yet, the price separates to the downside. What is that doing to the price? Well, that's putting the price right back inside of this range where it already was when the price was basically fluctuating down near the lows of the day. Again, point being, going back inside of that range, not what a truly strong move is going to do, not what a bounce is going to do. A bounce is going to make progress, whereas the price comes down here, hovers around, and then heads back up. Well, what would you have in this situation? You'd have a set of lows right here. You'd have the previous set of lows down there. If you picture each of those as stair steps, well, hey, the stair steps are still progressing in the upwards direction. And again, that's what a bounce does, right? It makes progress forward. And in this case, I'm just defining and quantifying quote unquote progress as 42 cents. What about areas of resistance? Key area of resistance going into tomorrow, and what I would call kind of the must break level if this bounces any sort of chance at getting some organic momentum, causing scanners to go off and bringing in, more traders and such. And that's right up there at 45 cents. So 45 cents, in my opinion, at least, definitely that very important hurdle. Well, if any sort of significant bounce has any chance at happening, that's going to be the first bridge that needs to be crossed. So all in all, interesting day. We'll see if this bounce can get any sort of more momentum tomorrow. One of the most popular questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point. And like I say, it is free. Thanks for watching. Have a good one.